Thank you. It is time to take a look at your money here on Good Morning Quad Cities. But first, let's get you a weekly stock market recap. The S&P 500 down over 3%, NASDAQ down by 4%, and the Dow Jones Industrial Average down by almost 3%. On Thursday, the Department of Labor reported that the number of people receiving unemployment insurance for at least 1 week increased by 62,000. That's an 11-month high of 1.67 million. The 62,000 increase was the largest jump in continuing unemployment claims dating back to November of 2021. And our financial advisor is Mark Gravicheski, joining us live to help us break this all down. And, Mark, I'm curious to know, looking at all this data, how would you describe the current state of the labor market?
First off, a very good Monday morning to you, David. Good to see you again. Overall, and I think that's the context you really need here, David, the labor market is still fairly strong. For the past 9 months, the unemployment rate has held firm around, 3.5, 3.7%. We continue to see a steady pace of new jobs being added. We still have over 10 million unfilled job openings, which means there's still a strong demand for workers. But that said, David, we are starting to see some softening and some cracks beginning to form. More and more employers have been announcing either some type of layoffs or hiring freezes. The number of new jobs being added has been steadily declining. And since January, the number of those job openings has declined by almost 1 million. So the big unknown, David, is to what extent this softening in the labor market, then kind of carries over into 2023.
Yeah, and that's scary for people who are looking for jobs. So what do you think are some of the biggest challenges for the labor market as we do look to 2023?
I think it's this growing concern, David. The economy will dip back into a recession sometime next year in 2023. Look, to help get this very high level of inflation we have under control, the Federal Reserve has been aggressively raising interest rates. In fact, it's been the most aggressive pace of interest rate hikes dating all the way back to 1980. The problem, however, though, David, is that this current environment of high inflation and high interest rates is a very potent combination that acts as a tremendous weight and a tremendous strain on the economy. And that's why in a recent survey, 95% of CEOs say they project some type of recession within the next 12 months. As CEOs brace for this expected recession, many are understandably already starting to take steps to control their costs, and labor costs is one of those costs they're starting to reduce.
And with unemployment rate currently sitting at 3.7%, where do you see that for the next year?
Over the last couple of weeks, I've had a number of conversations with some former Wall Street trading colleagues of mine. And the general consensus, David, is for the unemployment rate to rise from, 3.7% to where it is now to, 4.5, maybe 5% by the end of next year in 2023. But as a big caveat, this is heavily dependent on the extent of any recession we get. And those recession forecasts we're hearing range from, short and mild to long lasting and very severe. Based on the conversations I'm hearing, David, I think Wall Street will be continually revising their forecast for the unemployment rate based on how they see this expected recession playing out. If it's short and mild, you might see an unemployment rate rise from the 3.7% to 4, maybe 4.5%. But if it's a long and severe recession, many of the Wall Street traders I've been speaking to, David, think the unemployment rate could spike to 6% or even higher by the end of next year.
Yikes. So really quickly, what would be maybe a little bit of advice that you would have for people looking to the future, maybe people whose budgets are already stretched and really don't have a lot of wiggle room?
I would say watch the big purchases. Obviously, with recession and high interest rates, Family and household budgets are already being strained to the max, and we're seeing people forced to pull money out of their savings accounts and put it to their credit card. As you enter the new year, really work on budgeting, managing your expenses, and for those big family costs, really double check to see if that is within the budget. And because you never know what this labor market may turn into next year.
All right, Mark, thank you so much, and we will see you again next Monday.
Great to see you again, David. Enjoy the rest of your week.
You as well, thank you. Now here's a look at what's coming up on Good Morning America.